Hello and welcome to another update video about silver. Yeah, silver has performed quite well together with gold, but gold actually even better. So silver has not really shown us any change in wave count or hasn't made it necessary to adjust the wave count. Looking at this short-term chart here, we already talked about that most likely a wave 2 finished on the 14th of February. That we're now in a third wave rally to the upside. At least it is a reasonable interpretation. This third wave here to the upside. Within the third wave, we might be about to start the third of a third wave, but possibly not after a bit of a deeper pullback. It can bottom at any point and start that third wave rally, the third of a third wave, which is very, very bullish. So we don't need that deep pullback for a low, but we need that a little bit of a deeper pullback for a more reliable low to form in this circle wave 2 pullback. There are two wave counts I'm observing. They are both part of the same scenario. They are both bullish. And we shouldn't be surprised if silver forms a very shallow pullback only because it is a bullish market. And I mentioned many times that I think 2024 could be a year of the metals. So far, at least, this is being confirmed. The chart hasn't done anything to negate that, to invalidate that. So I see no reason to change my opinion about it. If I have to, I will, but there's absolutely no reason so far. This was the right decision to be bullish on silver and gold, yeah. And there are two wave counts, however, I'm tracking, or two scenarios. Basically, it's the same scenario, just two, yeah, you could say two variants of the same structure. In the first one, which is the white count, we should see one more high before a wave 1 is forming. So this circle wave 1 would sit here and the wave 2 pullback would start afterwards. That would give us a very clear 5-wave move. 1, 2, 3. Then this was an ABC in wave 4 and one more high in wave 5. In this scenario, however, this low should now not be broken again to the downside. The last low, which was formed here around $24.35, and we should see one more high, ideally above the $25.76 level, which was formed on the 21st of March. There is some resistance at $25.93, but yeah, basically one more high would be ideal in this structure. If that happens, then we can also calculate a target for that based on that wave count. If we really have a wave 5 unfolding now, then the target range, yeah, already gave you sort of that $25.90 level. There's good confluence here with $25.70. There's a bit of a cluster of resistance there. A bit shallow though for a fifth wave. Better would be the 61.8 extension level around $26.65. So I don't really want it to get much above that level. But yeah, this would be a level to watch or a range to watch. So one more high. If that one more high happens, we can then still watch for a wave 2 pullback to start a little later. Or the wave 2 pullback has already started. In this scenario, the top was here, the last high. It's a yellow count. In the yellow count, we had a very, very shallow and, to be honest, somewhat unreliable wave 4. 1, 2, 3, and then a shallow 4 and a shallow 5. Don't like that count that much. Both are, however, to be considered. And both are bullish. So that is very straightforward then, isn't it? In terms of tactics, it means if the price comes down, dips into support regions, or even any pullback really could be an opportunity in a bullish market. The current support area is between $22.69 and $24.22. We don't need to touch it, but it would be more reliable for a wave 2 correction at least to touch it. And I think the main takeaway is that as long as we're holding the 22.69 level, which is the lower boundary line of that support area, the market is bullish. I would only have to revise my interpretation of, let's say, bullishness about this chart if there is a break below $22.69. So it's either that the price is currently forming this wave 2 correction already. Yeah, if the wave 1 topped, then this was an A wave down. B wave rally into resistance. We talked about this resistance area in the last video. It's between $25.06 and $25.46. It's a standard resistance area relevant for a B wave rally here. And then we could come down in the C wave. So in the yellow count, this is sort of how I would like to see it ideally play out. And I think that would be that would be ideal. We get the correction done quicker then. And then from there, from the support area, we can watch for a third wave rally to start. If the price forms one more high before the wave one is started, well, then I would have to adjust the support area accordingly. If the price forms a new high, I would have to adjust this support area to the top, and then you see it will go up higher as well. So I think next week will be very interesting for silver. What we have to watch for is how the price is reacting to this resistance area, and if another high is formed, I give you a target area. But at the moment, I'm leaning towards the yellow count, and I think this might be a flat structure that we're working on in the wave 2. I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.